In this episode of Bitcoin for Millennials, I am joined by Joe Consorti. He's the head of growth at Horizon and Theya and a leading voice at the intersection of Bitcoin, institutional finance, and real estate innovation.
Bitcoin is a $100 trillion idea currently valued at $2.3 trillion. If you can study Bitcoin to the point that your conviction overrides what the market is currently valuing it at, and you deem that the market is valuing it at a discount, that's the biggest informational asymmetry you're ever going to capture in your entire life. Meaning, if you have the conviction to believe that Bitcoin will eventually overtake gold, it'll eventually become a $100 trillion asset, it'll eventually eat the monetary premium away from equities, from bonds, from real estate, and it'll eventually be a cent a trillion dollar asset, then that's where your asymmetric opportunity is. That's where your edge is.
I really enjoyed this conversation, and I hope that you do too. And if you do, please like and subscribe here on YouTube or follow me on any of your favorite podcasting platforms. That will help me to reach more people and spread the message on Bitcoin even further. I appreciate your support. Now let's dive into this episode. What originally drew you to Bitcoin, and why has it become such a big idea for you personally and professionally?
For sure. Yeah, I love telling this story. Not a millennial, so I'll say that up front, but I am Gen Z, just 3 or 4 years below the cutoff. I was drawn into Bitcoin. I initially wanted to go into medicine, funnily enough. And when I was in school, I figured I wanted to talk for a living instead of going to school for 12 years and going through residency and getting a medical degree. So I decided to go into finance instead. And the idea behind that was if I ever wanted to do anything other than finance and business, I'd be able to with a finance degree, but not vice versa, right? If I got like a marketing degree, it couldn't work in finance. So that's what I did. And while I was up at school, I met 2 great guys who were in class with me, Dylan LeClaire and Tyler LaRoche. Dylan, obviously, with Metaplanet. Tyler LaRoche is with BTC Inc. Tyler had been talking about Bitcoin for quite some time because Dylan had introduced him to it. I'd been orange pilled by those 2 guys. It was kind of on my radar for some time. What drove me into Bitcoin wholeheartedly was I was studying financial markets on my own time. They'd given us Bloomberg terminals in the library, and I think I was like one of 2 students that took the business school up on that offer. And so I started browsing the terminal, trying to teach myself how to use it. And Bitcoin was an asset that caught my eye, but it was really during 2020, March of 2020, my freshman year. It was spring break was, the second week of March of 2020, March 13th, government shuts down, world shuts down. I'm on spring break. They don't let us come back to our dorms to get our stuff. And so that was like the first instance in my life, at the very least, where directly, the powers that be per se are kind of wielding it in such a way that I don't really like, right? It kind of made me jaded toward higher authority, essentially. And so that drove me down the Bitcoin rabbit hole even more. I did more research. I ran a company in my free time because I figured I'm at home now. These are Zoom classes. I don't need to attend them. I'm going to run a company. I took the proceeds from that company, aped into Bitcoin in late 2020. Read a couple materials, Masters and Slaves of Money by Robert Breedlove, Bullish Case for Bitcoin by Vijay Boyapati. And my convictions were, very, very hardened. And then I saw a number go up in real time. And so, it's kind of a combination of both of those things that drew me in. But now, as we've seen how the world has progressed since 2020, now 2025, it's just really hard in my beliefs in this asset. I was picked up out of school my junior year. So I left early to go work with Nick Bhatia at the Bitcoin Layer. Basically, he liked what I was putting out on Twitter. Kind of just speaking into the void. And so him and I, along with Matt Ball, we turned the Bitcoin Layer into kind of, a small Substack publication into this huge multimedia outlet.
So what I like about your story is what I find similar with other people. It's, I'm interested in finance and stuff like that, but there is something external happening that eventually triggered something against the authority, other people that are no better than you and me, that eventually decide over in this case where you basically could go. How did you eventually connect that back to like money and finance? Did that make your understanding of the problem that Bitcoin eventually solves also bigger, maybe even combined with all the money printing, etc., that you saw?
For sure. Bitcoin as an asset kind of came at a time where, especially in the business school, one of the cool things we had was a massive Chiron, kind of like they have on the New York Stock Exchange, that was in every classroom that showed stock tickers moving across. And when Bitcoin kind of fell to 3,000 and then rallied later, it was kind of around the same time that Tesla was doing it too. And so it was the talk of the town, but it was mostly coming from the standpoint of being a financial asset. And so being in the business school at the time, I only thought of it as, another financial asset. When they sent us home and when they told us you can't come back, I couldn't even come back and get my computer. We couldn't enter the dorm rooms. I had an overnight bag. I had to buy all new clothes. It made me understand that, okay, maybe, there needs to be some kind of fix for this. There need to be some kind of reason that these power structures exist. And I read not only those two materials that I mentioned, but also the Bitcoin standard. And I started learning about Austrian econ. Now, I also have a minor in econ. So I majored in finance, minor in econ. And, the economics courses I was taking were all from the Keynesian school. These ideas of aggregate supply and aggregate demand, and that's what makes the world go around. And the Fed exists to make sure that those two things are in alignment, so prices don't go too high and employment is stable. That was my world. That's what I was being taught, and I was helping, I was really interested in those kinds of classes because I want to fundamentally understand how the world works, how the global economy works. But I was being fed garbage. And I didn't realize that until I really started searching. I read the Bitcoin standard. That was my first intro to Austrian econ. And then I fell down the rabbit hole there. And then I realized, wait a second, Bitcoin solves for all of these things. The very reason that these people have the ability to do this is because of these power structures that are created by fiat money. If you go back and you basically look at the creation of the Federal Reserve, it's not something that was voted in unanimously, right? There were many dissenters. In fact, two of the dissenters for the Federal Reserve were on the Titanic, and both of them died. Which is interesting. And so, had both of them not died, maybe the Fed wouldn't be a thing today. And the departure from hard money has really caused all of these distortions and made it so that rather than goods and services being priced naturally by the market and a natural level of interest being arrived at, an interest rate is set and maintained by a central entity, and the world has to revolve around that. And so, this central entity that's creating the price of money has caused all these distortions. And so how it relates back to college, when I was going to school, the only reason college is so expensive is because we guarantee student loans at the federal level to basically anyone with a pulse. And so college has become a bank, basically an offshoot of the banking industry. It's not a place that you go for genuine higher education anymore. It's a place that you go because you can't find a job unless you have a degree. And that is a function of the amount of people we're sending to school. And so all this is to say, the bloat and the bureaucracy that's present, in the school that I was at is solely a function of fiat money, right? Guaranteeing these loans by the federal government. And making sure that as many people as possible can get sent to school. And Bitcoin solves for this, right? Because it takes away that power from the institutions. In essence, it's the apex hedge against what these institutions are doing, right? Bitcoin being absolutely scarce is the exact opposite of the US dollar, right? And so, we're in a position now, and this is a little bit off track, but the government is, the strategic Bitcoin reserve, even if they don't actively accumulate Bitcoin, try to use it to solve their debt problem, that's just better for you and me, right? Because it means that the Bitcoin we hold will appreciate faster. Bitcoin is a final destination that's all but certain because of what's happening in this country right now. And, that's kind of how I attached all of these things together in my mental framework. I began to realize that these people don't care. They don't care about you or me. All they care about is making sure that, they get a higher paycheck next year. And they want to make sure that they can slam as many students into a classroom as possible. And that same exact mentality, that same exact method of running something is present at every single federally guaranteed or federal offshoot organization all the way across the country. They don't care. Their incentives aren't to create a good product or service for the end user. Their incentives are to wax the taxpayers out of as much money as they possibly can, blow the budget as much as they possibly can to justify higher prices and justify a higher salary. And so I connected it all to Bitcoin pretty naturally in my mind. And then for the remainder of my college tenure before I left, that was basically what was going through my head. And I was known as, the one of the crazy Bitcoin guys. That's kind of how I connected all of that together and figured Bitcoin being the solution.
Bitcoin custody is evolving, and OnRamp is leading this change with multi-institution custody, eliminating single points of failure. Instead of relying on one institution, OnRamp secures your Bitcoin in a cold storage multi-sig vault backed by 3 independent custodians, where no single party can move your funds alone, providing an unprecedented level of security. Your assets are protected by a 100 million Lloyd's of London insurance policy, with all transactions fully auditable on-chain and only executed at your direction. This means complete transparency and control over your assets at all times. Beyond custody, OnRamp provides comprehensive Bitcoin services that include trading, lending, inheritance planning, and IRAs. You can view them as your private Bitcoin banking partner tailored to your wealth preservation goals. Whether you're new to Bitcoin or an experienced holder, OnRamp's approach helps you secure your generational wealth with unmatched security and peace of mind. You can sign up at onrampbitcoin.com and use code BRAM, that's BRAM, to receive $150 in Bitcoin after your first deposit. If you first want to learn more, you can also book a free consultation via their website to speak with one of their Bitcoin custody experts. Tell them you came through me, and they'll take extra good care of you. What I got from what you said is, this classic teaching of economics, especially in the Western world, I would say, there's a certain idea of the fact that the world is like malleable by just throwing money at it, in a sense. And I feel that goes way past what the Austrians actually talk about, the whole human action, your needs and your wants and stuff like that are way more diverse and come at different moments and times than what is now being pushed in a general economic sense, right? It's all like consume, and grow, always grow. But that is not the rhythm of nature, right? Like you go up and down and there are like equilibriums and stuff like that. So yeah, how do you think about that when you look back now, when you've also learned another ideology about economics?
100%. So one of the main things that I was being taught in the classroom was that active government intervention was absolutely necessary when it came down to some kind of crisis. And it's funny now that looking back 5 years ago, I was being taught that, and now I'm basically pointing everybody to the solution for that. Essentially, like the idea is that the Federal Reserve must exist and the U.S. Treasury must also exist, because every single time there's an economic downturn, there needs to be some kind of central entity that steps in and prevents a multi-year, multi-decade recession. If you consider it this way, Austrian economics on the other end, kind of talk about free markets and the self-regulating nature of free markets and minimal government intervention, and that these things correct themselves over time. What this has caused today is that rather than allowing an economic downturn to take shape, because we prioritize GDP growth at all costs, the Federal Reserve essentially exists to make sure that there are never 2 consecutive quarters of negative GDP growth, to ensure that GDP is always growing, right? This gross domestic product, so that we're always consuming, regardless of what that consumption is. We're always producing, and the government's always spending money too. The government's always investing, making sure that we're exporting, making sure that our net exports are up. And by prioritizing this, instead of individual prosperity, which is much harder to gauge, and that's by design, we've created a world where we are basically sacrificing our country, and we are sacrificing the currency that the country and the rest of the world runs atop of, in favor of making sure that this arbitrary number goes up forever, which is GDP. GDP isn't actually a reflection of human prosperity whatsoever. It's just it's essentially a metric for economic production. But it doesn't factor in whether that economic production is good or bad or necessary. And so essentially, we're just making sure that this economic production rises at all costs. And, the Fed exists to, obviously, it has this dual mandate to maintain stable prices and ensure full employment. What that basically means is that, on the one end, the Fed doesn't want prices falling too much, because that means people will probably delay their consumption. They want prices to rise steadily by 2% every single year. That's what they target, so that people go out and buy things and buy stuff. And when it gets too out of hand, then they raise, interest rates. They raise their policy rate. They basically tighten up the cost of capital to rein it in and induce an economic downturn. Instead of allowing free market forces to cause these things to occur naturally. So naturally, what you have, due to the Federal Reserve, is instead of allowing these small economic corrections to occur over the years, they let them build up and build up and build up and build up because the Fed is always correcting this thing from happening. And so if you can visualize, right, for the viewers at home, if you can visualize a line going up and to the right, basically, these small ebbs and flows above and underneath the line are just the natural order of the economy, right? That's what the free market would be. That's what economic growth would look like if not for government intervention. What the Fed has created in concert with the U.S. Treasury is they have engineered the boom and bust cycle, right? Because they're basically staving off these minor economic corrections, and in doing so, they're ensuring a future economic crisis. And that's basically what we've experienced over the last several decades since, over the last more than century since the Fed was created, but more so since we departed the gold standard. You look at 2008, you look at 2020, you even look at something more transient like the Silicon Valley Bank crisis in 2023. And in all of these instances, the Fed's main goal is to respond in kind, right? To make sure that rates are slammed to zero. And if they need to, purchase distressed assets from banks so they don't go belly up. And so basically tying all of this back to what I learned in school is I was taught that's absolutely necessary in the classroom, but outside of the classroom, what I saw was the devastation that caused, right? Extreme amounts of inflation, mass unemployment, and then following that, mass unemployment, and then following that, extreme amounts of inflation. And so it's from one extreme to the other. When in actuality, if free market forces were simply allowed to correct itself, if the world did not shut down because of what happened in March 2020, then chances are everybody would have got it. Everybody would have had the sniffles or the flu, and then everybody would have been fine, and the world would have kept spinning. And we wouldn't have had this massive boom in the national debt, for the Federal Reserve to buy all these distressed assets and the Treasury to buy all these distressed assets, and the Fed with newly printed money, and then the Treasury to put helicopter money in everybody's pocket, and everyone got that $2,000, $14,000 stimulus, whatever. Had free market forces just been allowed to take care of the situation, we may have saw a minor economic downturn in March through maybe June of 2020, and then we'd be fine. We'd be without this additional $10,000 in national debt that 10 or 12 that we accumulated since then, and we would be without the extreme amounts of price inflation that we've experienced since then. And so, really, to tie this all into this answer, very long-winded answer, what I was being taught in the classroom was the exact opposite of the way that the world worked. And I was seeing that what was being taught in the classroom caused a great deal of devastation and distortion in the real world. And that really turned me off to the whole thing. That made me search for something other than what I was being taught. And the Austrian school and Bitcoin fit extremely neatly into that.
Yeah, a few thoughts. I'm thinking of the word nominally constantly, right? That's what James Lavish taught me when he talks about that. When you understand that, like you said, the line goes up and to the right. It's always green. It's always positive. There's always a positive percentage. There's always a positive number. Growth, right? But it's a number. It's not real, right? Like you said, when you're sitting behind a desk and you see a positive number, you could be like, oh, that's great. And then you can talk about it on TV, as a politician, look at my positive number. But when you just look in the real world, there is not more productivity, right? And what really was mind-boggling to me, and I think I'm happy that I don't have a finance or an economics background, that just the idea of just a natural rhythm of ebbs and flows, or up and down, that makes just total sense to me. And when you think about what you just said, they have to keep this system going. To me, and I wonder what you think, it just signals this is inherently flawed. If you cannot have, when there's when the S&P 500 is 8% down, people call for intervention and stuff, right? What is 8%? You know what I mean? How does the alarm go off that fast? When I kind of realized that really opened my eyes to it being manipulated, in several different ways. And that just went against everything what I thought just a free trade or market, or, people with ideas attempting stuff would be. Does that make sense?
It does, yeah. So the funny thing you say there is it does showcase that it's manipulated, and it does showcase that it is a flawed system. one of the third shadow mandate per se is that the Fed also cannot allow the S&P 500 to fall too much. And that sounds crazy and that sounds untrue, but if you look at its track record, particularly since 2008, it does not allow a massive correction in the S&P 500, a massive drawdown, sustained drawdown in the S&P 500. Reason being is, guess what? The wealth effect, right? If people have less money on paper, if your 401k, your retirement, whatever, is composed mostly of stocks, and so therefore, stocks are doing well, you're going out and spending more. But when stocks don't do well, you spend less. And what do we prioritize as a country? GDP, consumption, massive amounts of consumption. So consumption not only needs to remain, but it also needs to increase over time. And if people aren't getting richer on paper, then they stop consuming as much as they were. That leads to a downturn in GDP and potentially this, awful, terrible, thing that we need to avoid, which is 2 consecutive quarters of negative GDP growth and a recession. And so essentially the Fed is now stepping in when asset prices fall because it's prioritizing consumption, right? Ultimately, people think GDP is economic production, whatever, right? But if it's not real economic production, and if your formula relies extremely heavily every single year on increasing amounts of consumption, then ultimately the way that you're running your country, your incentive structure is flawed. It drives people to consume in the near term on things they may not even need, and it drives them to not do things in the long term that they should be prioritizing, right? Long-term investments, buying a home, starting a family, starting a business. People avoid those things because near-term consumption is incentivized. That's essentially the system that we're in. And it's an extremely flawed system because in the near term, you're exactly right, Bram, a politician can go on TV and say, look, the number went up, right? Our president's doing great, or my congressperson is doing great, or I'm a great congressperson, whatever. But ultimately, in the long term, it's horrible for the citizens of this country. And then, frankly, anyone who holds US dollars.
Would it be correct to say the goal of keeping everything positive is to have other countries buy US debt? And that is what eventually helps the US to keep the dollar, for now at least, the world reserve currency, which they can use to partially inflate the debasement away. Is that correct?
Yeah, you're about right on the money. So the United States is in a situation now where we're running, close to a $2 trillion deficit every single year, a budget deficit. So we're spending close to $2 trillion more than we make in revenue. At the same time, our national debt is $36 trillion, approaching $37 trillion. The debt ceiling was just raised to $41 trillion. And so essentially, A, it's not a debt ceiling, but B, what does this mean for everyone? What does this mean for the American people and US dollar holders? The United States needs to remain competitive on the global stage. So meaning it needs to offer, these competitive rates. That said, the US dollar and US treasuries are the underlying rails for global capital markets. And so there will always be demand for US dollars and US treasuries. That said, because of our funding needs, we need to increase the amount of issuance over time. And so if you actually go back and take a look at the total amount of the national debt, it kind of looks like it's on an accelerative growth path, right? Not too dissimilar from the Bitcoin chart. And that's purely a function of, our funding needs are increasing exponentially every single year. And so our debt needs, our debt issuance increases exponentially every single year. So we need these countries to buy our debt, but it needs to be at a very competitive rate so they're incentivized to hold it. And so essentially that's the system we're in, right? We cannot pay the rates that we're issuing debt at. We simply can't. We're running like I said, a near $2 trillion deficit all across the U.S. Treasury curve right now. I think the 10-year is at like 4.5. The 2-year is not too far behind. Paying that out annually, paying trillions of dollars in that interest annually, our interest expense as a country annually is nearing $1 trillion. So $1 trillion every single year, money that we don't have, is going to pay off solely interest, not principal, interest on our outstanding debt. And our debt issuance is accelerating because of our funding needs. And so our solutions as a country, and so you're exactly right, you're on the money. And I'll add one other thing. Our solutions as a country are twofold. We can cut spending, or we can just run it hot. We can just continue accelerating debt issuance, inflating away the difference and acting like nothing's going on. Option number one, we tried and it failed. We put a literal rocket scientist in the White House, and he hired a crack team of high IQ individuals from all across the country to figure this thing out and find the ways so that Congress can vote on it and cut it They found it. The rocket scientist did his job, ostensibly one of the smartest guys in the world, and Congress didn't vote to pass these cuts, right? So, if a rocket scientist can't figure out the spending problem in the United States and cut spending, nobody can. And so the only other option that the United States has is to run it hot, to let inflation eat away the difference so that the interest that they're paying back to these U.S. Treasury holders is worth less in dollar terms. They're being paid back in debased dollars.
Yeah.
That's the route.
So nominally, so this is what blew my mind when I realized this. So nominally, they get it, but each unit is worth less.
Correct.
Right?
Exactly.
And so because they are still paying it, right? The sovereign debt is still being sold to other countries, which I find fascinating because, if you are a buyer of US debt, you would assume that in some way you're going to be paid off in, 3, 5, 10, 30 years, which, as you just explained, it doesn't look like this is sustainable, right? Because at one point, the payments on the interest are already higher than defense payments, right? And I think there are a few examples where that is a very critical moment for any country, which is a turning point, right? And I think they can extend it for some time, but I just wonder, like, the people that are buying the U.S. debt, don't they understand this? Isn't it very simple? Like, if you think the debt cannot be repaid, or when you get dollar units back, but they've been devalued at an ever increasing rate, why would I ever buy sovereign US debt anymore?
Well, part of it is capital requirements, right? Some people are required, they're mandated to hold a certain amount of money in cash, and the most risk-free cash, risk-free because they could print it, they'll never default on it, is U.S. Treasury. So that's one reason. And the other reason is because global trade is conducted everywhere in U.S. dollars, basically everywhere, right? We're talking, 80, 90% of global trade is conducted in U.S. dollars. And so instead of holding U.S. dollars, which yield nothing, you could hold U.S. Treasuries, which yield, anywhere from 3 to 4.5% currently. And so they basically do it because they have to. They conduct trade in dollars, and it would be far too difficult for them to put it into another investable asset, on their balance sheet before they have to flip it back into dollars and then, continue conducting global trade. They can't store that access anywhere else other than U.S. Treasuries. So they're kind of locked in, right, to some extent. However, at the individual level, people are recognizing this, right? Because we don't have mandates. We don't conduct global trade in dollars. We all have savings accounts. So we may spend in dollars on a daily basis. Living in America, I do, right? I go to the grocery store, I pay in dollars. But anything else that I'm not using for spending, that I'm not using for rent, that I'm not using for, my monthly expenses, is going into a better savings technology. And it's not U.S. Treasuries. You mentioned this is like a huge turning point for a country. I'll talk about Weimar Germany for a second. They're a fantastic example of this exact thing. Essentially, there are two options for you as a country. One, you can default on your debt and cause a massive multi-decade global recession, particularly in the state the United States is in. The amount of people who hold U.S. Treasuries defaulting on our debt would create a massive global economic recession, right? So you can't do that. We can't stomach that, particularly, as we mentioned earlier, when the priority is GDP, right? Production, consumption go up forever. We can't let GDP go negative, whatever. Option two is to cut spending. And I just explained how we got the smartest man in the world to come into the White House and figure out what waste we can cut, and Congress still couldn't vote on it because they all want to keep their jobs, and there are no term limits. That's a whole other discussion. So we can't cut spending either as the United States. So the third and final remaining option is to run it hot, right? Lynn Alden says nothing stops this train. Exactly. Print the difference, right? Continue accelerating our federal debt issuance. And then when it comes time to pay it off because revenues are not keeping up with expenses, print the difference, right? And so nominally, right, on paper, they're getting paid back, right? These people are getting paid back, but they're getting paid back in low, if not negative, real terms, right? Those dollars are worth substantially less, particularly the farther out on the curve that you go, right? The longer duration instruments, the more your dollar that you're getting paid back and is going to get debased. So it's a really terrible trade, but it's the only trade that the United States has available to it. So that's basically the situation that we're in. And if you look back at historical examples, Weimar Germany, the collapse of the mark occurred over a much shorter window, right? A 3 to 5 to 7 to 10 year window, right? However, because of the size of US dollar markets, right? US dollars, US treasuries, and treasury equivalents, it's happening not over a 3 to 7 year window, it's happening over a multi-decade window. And we're just frankly still in the early innings of this. And the best way to gauge this in real time, back then, it was to look at the gold priced in marks, gold being hard money, marks being your denominator. As marks were hyperinflated, then gold shot to the stratosphere within 3 to 7 years. We're not experiencing hyperinflation in the United States. We're experiencing inflation that's way higher than the CPI index posits. It says, 2 to 3%. It's more like 7 or 8% annually, if not more. And so the most accurate thing we can do today to gauge how much the dollar is being debased is look at the Bitcoin price. That's it. So that's the situation the US finds itself in. And Bitcoin, frankly, is the best way for you to track how quickly the dollar is getting debased.
If you want to self-custody your Bitcoin stack, I recommend the Blockstream Jade Plus. I've been using this premium Bitcoin-only hardware wallet for a few months now, and I love its design and ease of use. What makes it stand out is its open source hardware and software, and Blockstream's unique genuine check, which makes sure that your device is authentic. No backdoors or compromises. You can connect with the Jade Plus however you want. Bluetooth, USB-C, or you can go fully air-gapped with its built-in camera for cable-free QR transactions. The metal case feels solid and the color screen is easy to read. And it connects with your favorite Bitcoin apps like Blockstream Green, Sparrow, and Electrum. Get your Jade Plus today at store.blockstream.com and use code BRAM to get 10% of your entire order. Let's talk about something that not a lot of people think about before it's too late. Where are you storing your Bitcoin seed words? Are they truly secure? I found my solution with StampSeed. It's an elegant all-in-one titanium plate solution with no separate pieces to lose or manage. Your seed phrase gets permanently stamped into pure titanium that withstands fire, survives water, and lasts for generations. Unlike shallow etching methods, StampSeed's patented tools help you to deeply stamp every letter for permanent readability, protecting your financial legacy. When you order a titanium seed plate from StampSeed, you can also upload a custom design or your logo to customize the back of your plate to make it fully personalized. Paper seed phrases are a disaster waiting to happen. Secure your Bitcoin with StampSeed for decades to come. Visit stampseed.com and use code BRAM, that's BRAM, to get 15% off your order. When you said, the world trades in dollars, I think what people need to understand is that this is the size of the scam, basically, right? They got other countries to trade in a currency that the US can just print at will. And then they got them, they mandated some institutions, right, to buy these treasuries to basically fake interest. Because as you said, in real terms, if your return on a treasury is 5% and there's a 7% debasement, then it's a negative real yield, right?
So they kind of rug pulled all of these banks in all these countries because the US dollar, and before we started, we talked about Bretton Woods and how it would be hilarious to host a Bitcoin conference at the George Washington Hotel, because that's where Bretton Woods was signed. But basically, when the dollar became the global reserve currency, right after that, the post-World War II industrialization era began, right? The entire global economy as we know it, the foundation was laid. And underneath the foundation, the bedrock is US dollars. It used to be backed by gold, right? And then everyone got rug pulled in 1971 because the US ran into the solution that we just talked about, which is they had a choice to default or print the difference. And they could not print the difference because the US dollar is pegged to gold. So they detached it from hard money. The world used to run on hard money from about 1940 something, 1945, 1947 to 1971. It used to run on hard money. And then all of a sudden, everyone's trading in dollars and is no longer attached to gold. Everyone got rug pulled, right? But currently in 2025, it's still going on. You'd be surprised the amount of people who think the dollar is still backed by gold that I interact with.
So why do you believe it is very essential right now for millennials and your peers to pay attention to Bitcoin?
Absolutely. Well, one thing I'll say is that, I've kind of spent in what I do and what you do is basically we explain the problem 1,000 different ways, and then we explain why Bitcoin 1,000 different ways. And so you can come at it from a number of angles, but I'll say this, Bitcoin is an absolutely scarce commodity, right? In the same way that gold was a commodity that was scarce, gold is only relatively scarce, right? So they're constantly finding new gold. I believe less than 2% of the Earth's gold has been mined. Obviously, as technology gets better, we'll be able to increase the supply schedule of gold, so increase the amount of new gold coming out of the market every day. So it's actually less scarce than you think, right? It's basically, scarce until the price goes up so much that miners can then take some of that excess profit, invest in new equipment, pull more of it out of the ground. It's a supply response function, right? Essentially, the supply response to demand. When the price of gold goes up, meaning it's really in demand, then guess what? The supply schedule goes up. And in the same way, when its price goes down, the supply schedule goes down, meaning that over a long enough period, all gold is doing is simply appreciating roughly in line with inflation, if not a couple thousand basis points higher, right? Because there's this supply response function, because it's not absolutely scarce. When you think of scarcity, you think something that there's only a finite amount of, right? Gold, there is no finite amount of that we know of, right? You can get gold in asteroids. And obviously that's a crazy example, but the point being, there's still 98% of the Earth's gold to find, right? That doesn't sound all that scarce to me, particularly when you're talking about a $22 trillion asset. If all of a sudden that 98% of gold now flooded the market, the individual units of gold would crash, right? By a commensurate percentage, 60, 70, 80, 90%. And so when we talk about saving our wealth, right? I just described the accelerating problem that the United States is on, this fiscal trajectory that just can't be circumvented. I talked about the three solutions and why two of them are basically no good. And the only one that they have is to print more money, is to run it hot. Let real growth be negative, essentially. So then it becomes like, okay, as an individual, when it comes to storing my value, what do I want to store it in? What do I want to store my gains in to insulate myself from this fallout, right? The denominator that underlies my entire life is withering away in value. My purchasing power is withering away by the day. The house I want to buy is more out of reach. The car I want to buy, the family I want to start, the business I want to start, all these things are increasingly out of reach by the day. And so as an individual, when you're allocating capital, when you're making this store of value decision, you want to choose the most scarce vehicle in the race. If your denominator is absolutely infinite, right, in terms of the amount that can be issued, right, the amount that its purchasing power can erode, then you want your numerator in that equation to be absolutely scarce. And Bitcoin is the only absolutely scarce horse in the race. It's the only absolutely scarce asset on planet Earth. Of course, the only other absolutely scarce asset is time, right? We only get, 60 to 90 years of it here on this planet. But in terms of a monetary good, Bitcoin is the only absolutely scarce monetary good in the world. And so really it's a no-brainer, right? You have this denominator, you have this accelerating fiscal problem that cannot be solved by cutting spending or defaulting on the debt for reasons I outlined. The only solution they have is to create more of that denominator. Your job as an individual, whether you are single, married, have children, whatever, is to allocate to Bitcoin because it's the only absolutely scarce vehicle in the race.
I saw that you tweeted, or maybe it was a video of yours where you talked about how Bitcoin now is moving from something that is high risk to more an asset that is more risk off. So where first the perception was, okay, this is risky, this is new, it's a Ponzi, it's a crime, and whatnot. People are taking it more and more seriously. I think on one side because there's a lot of education, on the other side because the problem that we just discussed is just clearer every day. I think for people when they go to the supermarket, stuff is just becoming very, very expensive. Yeah, can you talk a bit about that transition? Like, what phase do you think we're currently in with Bitcoin, and how could people view it also within that concept of the time frame? Like, how far should you zoom out?
For sure. Absolutely. This is a great question. So if we talk about risk on versus risk off assets, it essentially means, right, when we talk about risk, we mean, like economic risk here in the United States. So, assets that are riskier, right? So think about it this way. When we talk about risk on assets, people move out to assets that are less safe haven-y, right? Think gold under your floorboards being like the safest thing, all the way out to, let's say, like high yield corporate bonds, junk bonds, those being the riskiest. So when we say risk on, it means the market is in a position to move from gold under your floorboards to high yield corporate treasuries and anything in between, right? Basically stocks existing somewhere in the middle. And so basically, we're in a position now where Bitcoin is traded as a risk on asset. So it's traded in line with things like the S&P 500, but more so the Russell and the NASDAQ, right? These smaller cap, higher beta, meaning higher sensitivity to the market, and more tech weighted stock indices. That's the way Bitcoin is traded. But what I just described, Bitcoin's monetary properties, allow it to be more like gold under your floorboards. In fact, better than gold under your floorboards, right? And we talk about risk off, we mean, something happened to the global economy, or rates are extremely high, meaning that yields from U.S. Treasuries are more desirable than parking my money in the S&P 500 or an individual stock. So they move down the curve into things like U.S. Treasuries and gold. And Bitcoin sells off during that period. But in reality, Bitcoin's monetary properties that I've described at length being absolutely scarce and verifiably scarce, also 24/7, 365, not to mention it's a $2.4 trillion asset now, so it's highly liquid as well. And so it's essentially these monetary properties combined with its 24/7, basically instant liquidity globally, mean that it can be, and it's designed to be, eventually the apex risk-off asset, meaning that it's an asset that you want to own all the time, not just in periods where the market environment allows it to be a desirable trade, right? You don't want to own the S&P 500 all the time. When business and credit cycles are in a downturn, you don't want to own the S&P 500, but you do want to own gold. In the same way, when business cycles are booming, as it is now, when you have this, nominal growth, you have inflation, monetary debasement happening every single day, people still hold gold. But in that first situation, when business and credit cycles are contracting, people sell their Bitcoin, and they shouldn't be. But at the margin, this is changing. It's not changing from the trading standpoint just yet. If you look at cross-asset correlations, which is the important thing to gauge here, Bitcoin is still relatively highly correlated to the S&P 500, the NASDAQ, the Russell, other high beta risk assets. However, if you look at the institution, at the market structure, at the buying makeup of who's allocating to Bitcoin, the cohorts are shifting pretty tremendously. In cycles past, it's been all retail investors, right? So you and me and our friend down the street who are looking at Bitcoin and going, man, this thing is taking off like a rocket ship. I'm going to get in and ride the wave. One thing about that is retail investors are very flighty. You and me, Bram, and the people listening are probably in the minority saying, I'll never sell my Bitcoin, or I'll sell hardly any of my Bitcoin. I'm a long-term holder. Most Bitcoin investors of cycles past are short-term holders. They're flighty retail investors, right? So they see the number going up, they want to ride the wave, and then all of a sudden, when it starts moving in the other direction, they sell off just as quickly. That's been the makeup of these market structure for prior cycles. This cycle, the dominant cohort of allocators are through these ETFs, the people purchasing these vehicles. And who are they, right? They're retirees, they're pension funds, they're endowments, and others, right? And all of these cohorts are generally longer-term investors. They have a much longer time horizon than your typical retail investor that used to dominate Bitcoin market cycles. And so this has changed the way that Bitcoin has behaved at the margin for this cycle. In cycles past, it's been relatively tepid, and then all of a sudden in year number 3 or year number 4, it explodes to the upside, in 2017, going from $3,000 to $20,000, in 2021, going from $10,000 to $68,000. But this cycle is a little bit different in that we've just taken these minor stair steps higher and higher. First, it was 20K, then it was 40K, then 58K, then 70K, then 90K, now 120K, right? It hasn't been this massive boom and bust. And so when you start to see that behavior changing in the way that Bitcoin trades, and the underlying reason for it is that it's being more institutionally recognized, right? The ETFs are not to mention the fact that, governments, the United States government is now purchasing this thing. The fact that banks like talking about purchasing this thing, banks like JP Morgan are now considering Bitcoin to be used as collateral for loans, right? That's pretty huge. And also to tie it all together with a bow, Bitcoin is now number 6, number 5, but it did pass Amazon the other day to become the 5th largest asset in the world. And so Bitcoin is now not only being treated differently because of its size, but it's also being traded differently, and it's changing Bitcoin's market cycles. So while moving fully to a risk-off asset, meaning one that people always want to own in good times, but especially in bad, is probably several years from now, if not a decade or so, I believe that turning point will fully come as Bitcoin approaches gold's market cap and then flips gold into becoming the largest single asset in the world. Even though it might be years down the line, you start to see these things. And this is the first cycle where the dominant cohort of Bitcoin buyers who are changing the way Bitcoin trades are long-term investors, right? Essentially Wall Street. Wall Street has come into the fray. They're not these flighty retail investors that buy, sell, buy, sell. You're talking pension funds, endowments, retirees, and more all across the country who are holding this thing for the long run. And that's changing the way Bitcoin trades. And it's just another step in the direction of Bitcoin actualizing its destiny of finally being this apex risk-off asset that people want to own all the time.
Yeah. To kind of tie it back to the previous question, this is why I think it's so important for millennials, but also why there's such a big opportunity. Once you see that this asset is basically a superior money eventually, but the use case for store value, for just protecting your wealth, I think is more prevalent than the medium of exchange part.
Bitcoin is a $100 trillion idea currently valued at $2.3 trillion.
Yes.
That's what it is, right? So we talk about Bitcoin not being a risk-off asset yet, but Bram outlined correctly that's the opportunity. Therein lies the opportunity. Studying Bitcoin, understanding this thing now, and realizing that this is a much bigger idea than the market is currently valuing it. If you can study Bitcoin to the point that your conviction overrides what the market is currently valuing it at, and you deem that the market is valuing it at a discount, that's the biggest informational asymmetry you're ever going to capture in your entire life, right? Meaning, if you have the conviction to believe that Bitcoin will eventually overtake gold, it'll eventually become a $100 trillion asset, it'll eventually eat the monetary premium away from equities, from bonds, from real estate, and it'll eventually be a $1 trillion asset, then that's where your asymmetric opportunity is. That's where your edge is. In a very high information world, it's surprising how Bitcoin isn't already a $100 trillion asset, knowing what we know. But that's better for you at the individual level, because that means if you have a conviction to capitalize on it, you can, right, and secure not only your future, but your family's future, your children and grandchildren's future by having the conviction to make that decision today before the rest of the market catches on. And Bitcoin and all of these attributes of Bitcoin and the world around us and the dire situation we're in are already priced into Bitcoin.
I mean, I keep saying it, Bitcoin is an asymmetric opportunity based on publicly available information, but that is why it's so hard, right? There's so much noise, and you have to unlearn certain things you thought were true, or you just blindly trusted or unconsciously did, right? So it is that journey. I think even to add to that, this is a 1 in 300 year moment, probably-ish. Maybe even longer, right? Where something like this is happening. The last time a global asset similar to this was monetized was oil, if I'm correct, which was a bit shorter. But the idea of replacing this world currency, just a very big shift in how people view money and all these things. It is just. We are crazy lucky to be alive right now and having all that information in front of us to actually do the work and build a conviction, not on belief, right? Again, what other people say, but you can do that for yourself. And I agree if, all the information is out there. So it's very surprising that it's not at 1 million yet, if everyone understood what we are talking about in this conversation, then I also don't understand why it's not 1 million. But that is, again, your opportunity. Maybe a good question. If people then dive down, the money, finance, economics, Bitcoin rabbit hole, they will come across this narrative of, Bitcoin was for the people. It's all against banks. It's all against institutions, and et cetera, et cetera. Now that we live in this phase of Bitcoin's adoption, which is about the institutionalization of it. How would you talk about that? Like, how would you explain what is happening if we all say, Wall Street is bad, banks are bad, governments are bad with regards to money, etc. How would you take someone along coming across that argument?
Absolutely. So Bitcoin, so this is the one sentence I'll say, and I'll expand on it because people will view this as a contradiction, but this is what you need to remember, right? Bitcoin, the network, has not been compromised by institutions. Bitcoin, the asset, is simply being adopted by institutions, right? All that is to say, there are, probably 10, 20, 30, 40, 50,000 nodes around the world that we know of, probably hundreds of thousands more that are running anonymously. Every single one of those is making sure that everybody follows the rules of the network. The energy expenditure required, not to mention the miners that are ensuring that those rules never change, right? The energy expenditure required to actually change Bitcoin's rules, or what we call capture, right? People say Bitcoin is captured by institutions. The energy needed to do that would be tens of millions, hundreds of millions of dollars, and just to have a chance at potentially changing Bitcoin's rules or stealing Bitcoin or anything like that. And so the economic incentive, particularly as Bitcoin grows, to capture Bitcoin it makes it a totally unprofitable thing for an entity to do, right? However, the profitable thing for these entities to do is allocate to Bitcoin, right? So essentially, Bitcoin is designed in such a way, it's beautifully designed such that its architecture at the network level prevents any bad actor from changing it, right? If a node decides it wants to run a different set of rules, it's booted off the network, right? If a miner decides to do something that it shouldn't be, it's not mining Bitcoin anymore, right? And so essentially, you are economically disincentivized to try to change Bitcoin, right? All past efforts have failed. I have no reason to believe future efforts won't fail the exact same way, considering it becomes more expensive by the day, right? So what these businesses are deciding to do, whether they're banks or whether they're the federal government, what they're deciding to do is to allocate to Bitcoin instead, right? Because, there is malice and then there's stupidity, right? Ultimately, like if their MO is to basically make it so that people are held under their thumb and that, you and I are just considered worker bees, we're not considered individuals with souls, with lives that we want to lead, then essentially what they would be most incentivized to do is to make sure that they continue to run this scam. They continue to run, this credit expansion scam where money is lent into existence, and then at the same time buy Bitcoin so they could profit from that scam as well, right? It makes the most sense rather than changing their business practices to make it so that they're doing something like hard money lending, right? And they're making interest rates much more accessible. They still want to run that usury scam, that high interest rate scam, that money printing scam, but now at the same time, they want to profit from it on the other end, right? They recognize that at the federal level, this is unsustainable. And so while the going is good, while Bitcoin is still $120,000 per coin, they want to get in on some of it as well, right? So it's fair to say that Bitcoin is being purchased by institutions, right? And the reasons are debatable. But ultimately, they may be recognizing the same thing as you, or they may just want to profiteer from the scam that they're perpetuating. Either way, institutions allocating to Bitcoin does not mean they are capturing Bitcoin or changing the way that Bitcoin works. This was going to happen eventually, right? Bitcoin doesn't go from being a niche $100 billion asset to a $2 trillion asset to a 50, 100, $200 trillion asset with retail money alone, right? That's not how we get there. We get there by ultimately these institutions purchasing it. And then the idea is that it will change the behavior of these institutions from the inside. That's the idea. So yeah, that's kind of my thoughts on the institutionalization of Bitcoin, what it means for the protocol, and what it means for the asset itself. It was inevitable. It was going to happen at some point. And the good news is that they can't change a single thing about it. The only thing they can do is participate in the trade. That's it.
Yeah, I would add to that, if it's Wall Street that needs Bitcoin. It's not the other way around, because Bitcoin will proliferate anyway. I think it's rather a signal, right? The fact that it's taken serious enough to put capital behind it and adopt it. is more a signal. I think partially just because of greed on one side. They probably think they can make money, but there's a lot of possible assets that they could adopt. So why do you adopt a random internet idea that was released on a random internet forum 16 years ago, right? Like that is the signal itself. The fact
Certainly
that
greed plays a role. BlackRock's I Bet Bitcoin ETF was its most profitable ETF ever.
Of course. Yeah. But I think this is actually a way through to make sure that we get to the point that you described, which is at one point it's so big and so important that people that have and companies that have adopted are incentivized to protect it, to keep it as is, to keep it working, basically. And possible malicious actors should doubt if they just have a better risk reward, an ROI opportunity in just buying the asset rather than trying to corrupt it, right? So,
and why would you want to corrupt the asset that's doing 30% compound annual growth rate every year? It's just more profitable for them to buy it. And
so I want to connect this to something you said about Bitcoin going from 2 trillion to eventually 200 trillion as an asset of value that's stored within this asset. That comes from the fact that in the world, people use a lot of different assets to store their wealth, right? So, people know that if the cash loses value, you don't want to hold cash. So people are diversifying, they're storing their wealth in different types of assets. Among them, real estate is a very big one. And I want to talk about Horizon, what you do with real estate, but maybe even before that, people are using real estate as a savings account because they cannot really save in fiat money anymore. You can acquire more units of fiat money, but it's losing its value all the time. So you want to park basically your capital, your wealth in something that at least on paper, appreciates in value nominally. So a lot of people do that in real estate. I saw you predicted that real estate will eventually shift from something people basically use as a savings account, which is very weird, by the way, right? Because a home is a utility asset. It's not an investment asset, and it's definitely not a savings account or a replacement for money. So you say like we're going back from people treating real estate as a savings account to actually going back to it's a place to live or do business. Are you already seeing this change? What do you think will drive more of this change? And there's basically that for people to understand that there's different pockets of capital that's allocated in different assets. And if you put Bitcoin and real estate next to each other, then I have a friend who sold all his real estate for Bitcoin, and he says, I don't have leaky faucets, I don't have people squatting, I don't have fires, I don't have all this stuff anymore. Like Bitcoin never calls me about a leaky faucet, basically.
Beautiful. Absolutely. The global real estate market is $370 trillion. So that's crazy to comprehend. It represents more than 1/3 of the entire global asset value, which is about $1 quadrillion, according to Jesse Myers. And so, but ultimately, if you take a look and you normalize it through time, what homes used to cost versus what they cost today, if you basically just do this, if you adjust home prices in 1955 or 65 or 75, I actually use 1995 in an example that I calculated yesterday in a video that I made. Then the premium that exists in real estate is 54.8%. So essentially 54.8% of your house on average in the United States, based solely on CPI, is just a speculative premium, right? A premium that exists because people buy homes and use them as savings accounts, right? You look at Blackstone buying up single family properties all around the United States. Why? So they could use them to store money. They're not being used as domiciles or residences. And you add that up with arbitrary zoning laws and engineered scarcity, and you get the home price inflation that we've seen. But it's primarily this money printing that we've experienced, and people basically using homes as savings accounts instead of homes being places to live and raise your family. And what that's created is unaffordable homes and this severely misallocated capital. If you use another method of calculating it, what's called the intrinsic replacement cost. So basically, the cost to replace the exact same home today, what would that be? The way you calculate monetary premium, which is that speculative premium that exists on top of your home price, is basically take that estimated replacement cost and then take the total market value, subtract the estimated replacement cost, and that's your monetary premium. If you do that, then there's a 35.7% premium in global real estate. If we even take that low number, let's just say that there is a 35.7% premium on the in U.S. homes on average. We extrapolate that out across the United States, and we extrapolate that out globally, right? This is a pretty low-end estimate, right? A rough estimate that only 36% of global real estate is not actually in bricks and mortar, but it's just in vapor that exists on top of homes. It's in this speculative monetary premium. And overall, there is $132 trillion worth of premium in real estate that shouldn't be there. It's basically monetary capital that post-1971, and actually, these calculations are done, the CPI ones are done 1975. Reason being, it's after the US departed gold, and it's 3 decades after the post-World War II industrialization boom, right? So it gives us a good sense of what homes cost after this massive wave of population growth and after this wave of industrialization. So there's somewhere between $132,000 and $132 trillion and $203 trillion worth of monetary premium in the real estate market. So that means global real estate is essentially a $238 trillion market or less that's currently valued at $370 trillion. Because all of that monetary capital post-1975, now that the dollar is not backed by gold, it had to find a new home. And so it fled into gold, it fled into stocks and bonds, but more than anything, it fled into the real estate market. So this is like the most egregious example of a mispriced market, right? Less than 250 trillion of this, about 50% or a little bit less of the value in global real estate is not in actual physical houses or places of business or farmland. It's just in a speculative premium that exists between the market value and what it's actually worth. All that is to say, that's going to flow right into Bitcoin, right? Because now real estate being an imperfect savings technology, and you explained it quite well, you get your cash flows. Being a rental property owner sounds fantastic, but you have maintenance, right? You have tenants who might not pay, right? And all of this eats into your cash flows until you're getting paid, a few $100s a month, right? The difference between the mortgage you're paying and the rent you're charging, plus the utilities you have to pay for, and all the maintenance and upkeep and things like that, is a few $100 a month. Right. It is an imperfect store of value. Or if you're an individual homeowner, your home's appreciating 3% nominally every year, if not, maybe 5 or 6%. And if you're in a really good area, what's Bitcoin doing, right? It's doing 30% a year currently. What's the actual rate of inflation? Right around 8 or 7%. So your home is just appreciating in line with inflation because it's an imperfect store of value. In line with reported inflation. It's actually losing value over time in real inflation. So whether you are someone who owns rental properties or you're a homeowner, the reality is there's a massive monetary premium in real estate. Now, the reason it'll flow into Bitcoin is because Bitcoin is a perfect store of value, whereas real estate is an imperfect store of value. Ultimately, homes are made much more expensive. They're not places to live anymore. They're people's retirement accounts. If you look at the individual portfolio in 2025, the biggest line item is not people's 401k or their retirement. It's the value of their house. Over 49% of people's net worth is the value in their house on average across the US. That shouldn't be the case, right? People my age, 24 years old, have no dream of ever owning a home in the United States, unless you want to live in Detroit, right? No dream of ever owning a home. And that's because of this speculative premium, not just because of companies like Blackstone buying it up, but more importantly, because post-1975, we've printed money into existence at an accelerated rate, and all of that monetary capital is looking for a place to go. And real estate has served as that store of value, but Bitcoin is a more perfect store of value. I think what it takes to get from where we are to where we're going is people to build these funnels, right? From one asset to the other, from real estate to Bitcoin. Strategy has done it with Strife, with its preferred stock. That's siphoning money from the fixed income market into Bitcoin. Strategy and others have done it with their common stock and their convertible bonds and other Bitcoin treasury companies doing it with their equities are funneling money from the $135 trillion equity market into Bitcoin. There exists no direct funnel between real estate and Bitcoin until now, right? That's what we're building with Horizon. That's kind of the segue into what we're building, but that's essentially how marked up real estate is and what we're doing at Horizon. We let homeowners stack Bitcoin using their home equity with no debt, no interest, no monthly payments, no Bitcoin upside, and no term limits. And so if you're looking for a funnel from one to the other, and you're tired of watching your home do 3 or 4% a year and watching Bitcoin do 30% a year, and you understand that your home should not be your retirement account, it's an imperfect savings vehicle, and you're watching this perfect savings vehicle performance function every day, Horizon is laying the groundwork to build that funnel that will ultimately allow, it's one of many that are going to begin doing this. But if you are a U.S. homeowner, we are allowing you to essentially siphon away that capital you've already put into your home into Bitcoin without adjusting your lifestyle whatsoever. And I believe way more companies are going to crop up doing this exact same thing all over the world until homes are affordable again, and Bitcoin is a multi-cent to trillion-dollar asset.
I have a counter argument, and I wonder what you think, because I think people will think about the fact that, if real estate will be quote unquote dumped to sell to buy Bitcoin, maybe not when, just individual homeowners use Horizon. I think that is probably the opportunity that you guys see. But I think people would say like, okay, but that would cause a crash in the housing market, right? If people start competing basically in a seller's market, right? Like the prices will just drop very rapidly, which, as we talked about in the beginning, everything is linked in this system, right? And so real estate is also used as collateral, and so that would cause probably very bad outcomes. So maybe one is, how would you reply to that? The other one is something that I do see as an opportunity for Horizon, for example, is there are many people that are, paper rich but cash poor because everything is, stuck in their home. Many people think like, oh, this is going to be my retirement, nest egg, etc. But if other people before you figure out that Bitcoin is a better store of value than real estate, and they will start selling real estate, and the prices of real estate go down, that what you think you've built up as a nest egg in your home will go down as well, because you have to adjust to the market prices. So I would say that is rather a signal to do something with the excess home equity that people have. So yeah, I wonder about your thoughts, because these two kind of go against each other, I'd say.
100%. Yeah. And I always say, I like to say that people want Bitcoin to be $1 million tomorrow or this year. If Bitcoin was $1 million this year, something terrible would have had to happen in the entire global economy. Chances something like nuclear devastation in order for Bitcoin to be $1 million a coin, or the world reserve currency or something, right? Something terrible would have had to happen. In the same way, if Bitcoin demonetizes real estate over a 5-year, 10-year, 20-year, even 30-year window, something terrible has probably happened, right? Because as you mentioned, homes are used as collateral. Commercial real estate is used as collateral, right? You look at the CMBS market, right? These commercial mortgage-backed securities, where, the cash flows from this real estate is supposed to be going to the holders of these CMBSs. It's extremely distressed, right? The delinquency rate on properties that are part of a commercial-backed security just continues rising and rising and rising and rising. And that's not good, because that's how you get 2008 2.0, right? Real estate is used as collateral, point blank, period. So this needs to be a multi-decade, 50-year, 100-year process. Otherwise, you're going to see some economic devastation. And as I mentioned, as we've talked about at length, the Fed cannot allow a prolonged recession. Its incentives are such that it simply can't allow that to happen. So here in the United States, the way that I envision it beginning and kicking off on the homeowner level, it's with companies like Horizon allowing people to swap the equity they already have into Bitcoin, right? This asset that's proven to be the best performing macro asset of the last 12 years, the last 13, 14, 15 years. But at the institutional level, right, where homes are bought in bulk, they're securitized, and then they're sold off. That instrument is sold off, then that instrument is used as collateral, or an individual commercial property or a bundle of them is used as collateral in themselves. what needs to happen is this exact same dynamic I mentioned about the institutions now coming around to Bitcoin. They need to begin seeing that Bitcoin is the hurdle rate. Ultimately, if your investment does not yield or appreciate more than Bitcoin, it's not a worthwhile investment, right? And that applies to the individual level as well as the corporate level, right? If you own properties all across the United States or in a couple of different metro areas across the United States, and those properties aren't appreciating as fast as Bitcoin is, or the property appreciation plus the cash flows are yielding a net negative compared to what Bitcoin can do for you, then over time, these institutions are going to shift into Bitcoin and begin using it as that store of value over real estate, right? So this whole notion of a monetary premium, the way that gets resolved is by this market inefficiency closing and people recognizing that Bitcoin is a perfect store of value, whereas real estate is an imperfect store of value. And ultimately, it just comes down to money. For these businesses, they don't care. They just want to make the most money. And so it takes a multi-year, multi-decade recognition of that and a shift out of one into the other, where instead of having homes posted as collateral and have homes and other commercial properties on your balance sheet, instead Bitcoin is on your balance sheet and you're using Bitcoin as collateral for all of your borrowing and lending and things like that. And that's what becomes the base of global finance rather than real estate. That's a multi-decade process. So that way, nothing terrible happens, right? It's simply a correction that occurs over time. For the second question, as far as homeowners go, if this process does occur, right, then that would mean either a secular flattening in the rate of appreciation on homes or a secular decline in home prices altogether over, a multi-year, multi-decade period. That said, it's going to be quite gradual, right? So what I envision is the value of homes to continue appreciating, right? Don't get me wrong. But rather than accelerating with the rate of fiat inflation, they'll probably rise or accelerate to a smaller degree. And that's because more people at the individual level and at the, corporate level, like I just mentioned with businesses and institutions buying up, a lot of homes and using them as collateral, it'll happen over a multi-decade window. What that also means is that it's not going to be visible. It's going to be barely visible. But over time, I'll run these calculations again, 5 years from now, 10 years from now, 20 years from now. And I bet that the monetary premium over time in global real estate shrinks and shrinks and shrinks as Bitcoin monetizes its way to the single largest asset in the world. So for homeowners, it's going to be a multi-decade process. For business owners, all of this entire process of Bitcoin siphoning the monetary premium from real estate going to be a multi-decade process, one that is barely visible, but one that if you can recognize today, if you can simply recognize, then again, just like Bitcoin not being priced correctly in the market, that's where your edge lies. Understanding this and doing this today. At Horizon, we have built that vehicle, but ultimately there are a slew of options available for homeowners, right? You mentioned cash poor. This is the last thing that I'll say. One of the interesting things about Horizon is that, like, if your mortgage payment plus your monthly expenses basically preclude you from doing anything else, you have not enough cash to do anything other than paying for your home. You don't have enough cash to put into an investment, for example. Horizon offers a solution for that, for the cash poor, right? If you qualify in any number of the states that we're currently available in, essentially, let's say, you've got $1 million home, you can pull, right, up to 22.2% of your net equity. That is your equity minus your the home's value minus your mortgage balance. You can take that and then swap it directly into Bitcoin tax-free, right? That's what Horizon allows people to do. And then you can hold it for as long as you want. The Bitcoin is yours. You can do whatever you want with it. You could self-custody it, leave it on exchange, whatever. And then you could just let this thing ride and let Bitcoin do its thing while your home does its thing too. And ultimately, the decision for homeowners boils down to this. If you are staying in your house for another 15, 20, 30 years, and you understand that Bitcoin is on its path to monetizing to a 10 trillion, 20 trillion, $50 trillion asset over that period, would you rather 20, 30 years from now say, I'm happy that I kept my equity in my home and, I'm happy with my retirement being my home, it appreciated by 3 or 4% a year? Or would you rather say, I'm extremely happy that I bought one Bitcoin, close to one Bitcoin or more, a very long time ago, 20, 30 years ago, and now that's my retirement, right? That ultimately is the decision to make for the homeowner, right? At an individual level. Weigh the costs and benefits of this thing, but understand the trajectory that we're on. Capital is moving from an imperfect savings vehicle, which is real estate, into Bitcoin, which is a perfect savings vehicle. And Horizon offers homeowners at the individual level to become a part of that belief.
So if we want to help people zoom out, right, to kind of like see this timeline, I'm not really a price guy. I don't know. I know that you're also not talking about the price a lot, but I think you have more insights into this, right? So if people look at the next 6 months, 6 years, or even the next six decades, how should they think about this appreciation? I think on one side of Bitcoin, but also, what will happen? Well, we talked about real estate, right? But in the beginning, we also talked about bonds. But what do you think will happen to these other types of assets that people are kind of, comfortable with, like bonds and equities, etc.? How do you see that transition? Is it basically like Bitcoin is like a Pac-Man and it's just eating little bits of everything, or like how do you visualize that for yourself over these timeframes?
Absolutely. Do you mind if I share my screen? Is that all right?
Yeah, go ahead.
All right, perfect. So this is a graphic, and I'll send this to you as well. You've probably seen this a million times. This is the latest version of basically the total global asset value. This is created by Jesse Myers, onceinaspecies.com, @CreasesBTC on X. Bitcoin is right up there in the top left, right, at $2 trillion. It's funny you say Pac-Man because that's basically what this looks like. It looks like a Pac-Man game, and Bitcoin is extremely small, right? You can visualize, if we're taking the Pac-Man analogy, that every single one of these other things is one of those little pellets that Pac-Man eats. Some of them are cherries, some of them are pellets, whatever. But ultimately, Pac-Man is coming for it all. It's not going to make all of these markets go to zero. It's simply going to suck away all of that, or siphon away all of that distressed monetary capital that exists in these assets that shouldn't be there. And given that equities are an investment market, given that bonds are an investment market, only a portion of those markets are going to make their way into Bitcoin. Ultimately, people will still want to buy equities to invest in the companies that they believe in. People will still want to buy bonds in order to, gain fixed returns from companies or governments that they believe in. And so ultimately, the three biggest markets that you want to be looking at here in terms of what Bitcoin will siphon the excess monetary premium from, where the most monetary premium exists that it shouldn't be, is gold, art, cars, and collectibles, and real estate. Right? Those are the three biggest markets. And of the three, that is the largest. Real estate is the largest by more than a factor of 11. So it's pretty easy math, right? Ultimately, I envision this going pretty straightforward. It's going to be, again, a multi-year, multi-decade long process. The name of the game in Bitcoin is patience. But ultimately, what we have here are imperfect savings tools juxtaposed against a perfect savings tool that's accessible globally 24/7, 365. Etc. So ultimately, like the first and easiest thing to look at here is gold, right? Gold is currently a $22 trillion market or thereabouts. Bitcoin performs gold's function better than gold. It's going to become a larger asset than gold at some point and siphon away some of that premium from gold, right? Art and collectibles, again, another big one. Obviously, historic art pieces, those are probably always going to be highly valued. But the markups that you see on extremely silly art that frankly could be used for money laundering, a lot of that capital is going to be siphoned away into Bitcoin. Equities and bonds. More publicly traded companies in the US and elsewhere are going to create these Bitcoin adjacent vehicles for the purposes of Bitcoin acquisition. Bitcoin treasury companies, MicroStrategy has its common stock, it has its convertible bonds and preferred stock hitting both the equity and bond market. Metaplanet has its 0% moving strike warrants, right? Which are targeted at the equity market, right? In order to, purchase Bitcoin using equity proceeds. So those vehicles, all these Bitcoin treasury companies, they're going to siphon the capital from equities and bonds. And then ideally one day, sovereign governments begin doing things like bit bonds, Bitcoin-backed bonds, where it offers an extremely high rate of return. Bitcoin siphons away the monetary premium from the rest of the bond market because they're going to this Bitcoin-adjacent vehicle instead. The biggest one of all that's on here is real estate. And any value that isn't in the home and the land itself is pure monetary premium, pure speculation, right? Within real estate exists the largest pool of capital that simply should not be there, right? It is monetary capital existing in what should fundamentally be a utility non-monetary asset. And so, all of these processes are underway now, right? Bitcoin is already siphoning capital from the equity market, bond market, art and collectibles market, and gold market, and this money market over here on the right. And they're doing it with real estate too, right? But the way that they're doing it with real estate, the way that individuals and businesses are doing it with real estate, is one of two things. They are throwing some Bitcoin on the balance sheet of a property that they're purchasing, or they're selling their property outright in order to stack Bitcoin instead, right? with Horizon, there is another solution, right? There is $35 trillion worth of home equity in the United States. The total market, I believe, is $50 trillion. Horizon offers homeowners another way. You can allocate to Bitcoin using your home equity without having to sell your house, right? Previously, the solutions that have existed are you have to take some kind of home equity line of credit or a home equity loan or a reverse mortgage or another mortgage after you're done paying yours off in order to buy whatever asset you like, in order to buy Bitcoin, if the point is buying Bitcoin. With Horizon, we have another way, right? I mentioned, there's no debt, there's no monthly payments, no interest charges, no term limits, but you can do all of this. You can use Horizon without having to sell your home either. And so essentially, if you're in a house, right, Horizon, and you're staying there for 5 years, 10 years, 20 years, Horizon allows you to participate in this speculative attack on the dollar and on real estate by buying Bitcoin without having to sell your home or make any meaningful lifestyle changes with additional monthly payments, because we don't have any. And so Horizon is just one of many bridges that will be constructed over the next several years in order to facilitate this transfer, this demonetization of real estate into Bitcoin. But in my mind, that's how it goes, right? These are the mechanisms by which capital flees from each of these markets into Bitcoin. And that's how Horizon is doing our part on the real estate side.
Awesome. So some questions to wrap up. I'd love to get your take on, looking ahead. If you have like one bold prediction about the future of Bitcoin, either with regards to finance or technology, culture, what do you think most people are overlooking?
What do I think most people are overlooking? I think most people are overlooking the role of AI in their life. I think people are looking at AI in a fundamentally flawed way. At least most people are. When people think AI, they think of two things. They think of the Terminator. It's going to destroy the world. But more than ever, now that these large language models have cropped up and they're so common, is people are thinking AI is going to make you stupid, right? It's going to make us dumb. In some sense, it will. For many people, it will. But I think most people are overlooking the utility of AI, not as a supplement to your brain, but as a complement to your brain, right? Instead of supplementing your thinking with AI and letting your AI do your thinking for you, you can simply use AI as a tool to make what you already do more efficient, right? Whether that's learning, whether that's building something, whether that's writing about things, whether that is, scheduling things, whatever it might be in your life that you are doing that might be a time sink for you, you can leverage AI to do 2 times, 3 times, 5 times, 10 times the amount that you're doing. Instead of doing less and then allowing AI to supplement the difference, you can do more with the same amount of effort. In the same way that Bitcoin allows you to, save your monetary capital, right? Bitcoin does the legwork so you don't have to. In the future, you will be able to get more for less, right? Ultimately, apply that same ethos to AI and it can greatly enhance your life as a supplement, as a complement to what you're doing rather than as a supplement. That's the correct way to think about it. I think people are sleeping on AI's significance. And in doing so, they're just not leveraging it where I think people should be leveraging it to the fullest extent that they can.
Couldn't agree more. Once I realized that this thing basically is an extension to your hand, which makes you, by definition, a cyborg, I realized that it's the same with AI, but it's for your brain. Mm-hmm. I think exactly Absolutely. As you said. So I fully agree. So if Bitcoin eventually achieves mainstream status, whatever that is, by the way, I wonder what you think. What is one unintended consequence, either positive or negative, that you think people should prepare for?
Mm-hmm. If Bitcoin achieves mainstream status, I think that, and I think Sonny Poe tweeted this yesterday, ultimately, I think people will just not care about the price of Bitcoin forever. The reason being, if you go to Manhattan and you talk to people and you say, hey, did you know that each one of these buildings is $10 million? Most people will go, oh, I didn't know that, right? But they won't care. They won't care. In the same way, I think one unintended consequence or one unintended, reality of Bitcoin achieving mainstream adoption, once it's a $1 million asset, $10 million asset, $20 million asset, people just simply, the amount of care that people put toward Bitcoin today will only marginally be increased in the future once it is one of the largest assets in global markets and the single largest asset in global markets. That's what I think, right? Ultimately, because people like to take a relaxed stance, a relaxed approach. Once Bitcoin is a part of our life, like you don't see people going around and saying, "Hey, did you know that the U.S. dollar has a so and so market capitalization? A 20, 50, 60 trillion dollar market capitalization, right?" Mm-hmm. Nobody cares, right? And so I think that's the future we're heading into. I think a lot of people anticipate once we reach that point, whatever that point may be, whatever mainstream means to you, I think people will believe that, people will be knocking down your door and saying, "Oh my gosh, you were so this, that, and the other thing." I tend to think that people just will not care. And even once it becomes a part of their daily life, they still won't care. They'll just accept it as a given. And then the next generation, it'll even be more of a given than this current one. That's what I believe.
I like that. All right, man. Last question. And I ask everyone the same question, which is, what is a core belief that you will never let go of?
Absolutely. Follow God. That's a core belief that I will never let go of. And then the other one, secondary to that, is provide value and have fun. That's it. Every single day since, gosh, I think, I was 15 when I threw this in my calendar. It's provide value and have fun every single day. Whatever value means to you, at work, provide the most amount of value you can and have fun doing it, right? In your family life, provide the most amount of value you can and have fun doing it. That's ultimately the path to fulfillment, right? Following whatever God has for you, but while doing it, do it with a smile on your face and have fun along the way, right? The most we can do is leave our mark on this world, whether it's in a business that we build, relationships that we cultivate, a family that we make. And so whatever value means to you, provide value to the fullest extent of your abilities and have fun doing it.
Well, I thought this was a very fun conversation, at least for me, and I hope people found it valuable. So thank you a lot for that. Really appreciate your time. And yeah, man, thank you.
Absolutely. Thanks a lot, Bram.
I hope you enjoyed this episode. If you did, you can click here to find more just like it, and click here to find all Bitcoin for Millennials podcast episodes. Also, please like this video if you want to help shine a light on the message of Bitcoin, and subscribe to my channel to stay connected. I hope to see you for a next episode. Bye.